Good afternoon, everybody. Welcome to this deep dive webinar focused on R&D tax credits. My name's Stuart Rogers. I'm a corporate tax partner at FC. Been with the firm for about 10 years. Spent the last 20 years, indeed most of my career, with a heavy focus on R&D and innovative businesses. I'm joined by a couple of colleagues today. I'll let them introduce themselves in just a second, but I've got Dave Wace with me and Lisa. Dave, do you want to just give a bit of an intro to who you are?
Yeah, my name is Dave Wace, ex-HMRC, joined Francis Clark in late 2018 after about 27 and a half years as an inspector with HMRC.
Okay, Lisa.
Hi everyone, so Lisa Whitbread, I'm corporate tax partner. I've been with FC now for 20 years and probably for about the last 15 years specialising in corporate tax and various areas of corporate tax, including reorganisations, transactional work, but also I've been specialising in research and development tax credits as well.
So we've got a lot to talk about in a reasonably short space of time. We've got an agenda here, an outline. We've done the introductions for your presenting team, and really what we're going to do is break this down into three key sections. Really, we're going to talk about the history of R&D very briefly because that helps give context to the major kind of issues that are facing us, which are HMRC's current inquiry campaign around R&D and how that looks and what the trends are within that and what the options are. And then we're going to look at some of the forthcoming changes, which fundamentally are actually upon us quite quickly, the next month or two. And then also there's a consultation which we're yet to hear back from HMRC on, but we hope that there'll be some positive change in that. So we're gonna break it down a bit like that and get stuck into the subject matter. We suspect that lots of people might have questions, and there's a facility within the platform for you to ask questions. By all means, as we go along, just fire those in the Q&A box on your platform, and then we'll try and leave something like 10 minutes at the end, hopefully, for us to deal with questions. If we've got more questions than 10 minutes allows, then we'll just keep going, and people who need to leave can leave. So let's talk about the history of R&D. So R&D tax credits were born effectively in 2000. Borrowed largely from Canada, who'd kicked off the first well-developed R&D tax credit regime, really. I look back at those days as halcyon, very nice, pleasant days. We had HMRC keen to learn, the professions keen to learn and collaborate with one another. R&D was this new thing. Nobody quite understood it, and everybody worked together in a nice, pleasant, professional, cordial way. The key things were that we had a reasonable amount of HMRC audit activity, inquiry activity in the first decade. We had HMRC doing roadshows and training and all sorts of things, and there was a really good opportunity to have dialogue with HMRC. That got better when HMRC opened their specialist units, R&D specialist units in around 2006, and those were centred in different places like Bristol and Portsmouth, predominantly for us here in the southwest. And you had a very good line of communication with HMRC. You could speak to people who knew an awful lot about R&D tax credits. After you get kind of past 2010. It became noticeable that HMRC's inquiry activity began to tail away. Not completely, but there was a noticeable sort of tapering off of HMRC activity in terms of audits. And That's important because the R&D system works very much with a check and process stroke inquire approach, which many people will know is the 30-day window. You submit your R&D claim, HMRC are supposed to look at it, and within 28 to 30 days, the commitment always was they would either approve the claim or they would open an inquiry. And that's very important because without that commitment, people would be paid their R&D tax credit, understand that they've got that payment, believe that it's all done and dusted, and then be free to go off and reinvest the money, the credit that they've been paid. And that's a really important central pillar of the system. However, from around 2016, HMRC changed the structure of the specialist units. They effectively disbanded the R&D specialist units and sprayed the individuals around different parts of HMRC into different pockets of different teams. And it's really, I think, really noticeable looking back that from 2016 onwards, really, there were very, very, very few R&D inquiries. And whilst we had been quite used to the sort of 30-day check and inquire type approach from HMRC, I don't think after 2016 as a firm, we saw any of those. And of course, what all of that was doing is really creating a vacuum for no win, no fee R&D boutiques to come into the marketplace to offer a no win, no fee solution or service. People were filing R&D claims thinking that HMRC were checking them within 30 days. But I think as we later discovered in around 2020, HMRC admitted that they weren't checking as many of the submissions, R&D submissions within that 30-day window as they would have liked. And all in all, that lack of inquiry activity really resulted in a dropping of the bar in terms of R&D claim standards. The other interesting thing to point out is that Francis Clark and other accountancy firms generally are a member of the ICAW or Chartered Institute of Taxation, the CIOT, and we are essentially regulated and bound by a code of conduct. It's called PCRT, Professional Code in Relation to Taxation, which means we've got to take a great deal of care when we give advice to clients around what's possible and what's not possible, and what's good behaviour and what's bad behaviour. And there is a specific PCRT code of conduct or section of the PCRT in relation to R&D and how an accountancy firm should behave in terms of the R&D services that it provides. And that the PCRT commitment was made generally in about 2017, and I think the R&D specific addendum was around 2020. So a lot of R&D boutiques fundamentally are not part of the Institute of Chartered Accountants for England and Wales, or the CIOT, Chartered Institute of Taxation, and therefore they are unregulated in a sense, and they're not bound by PCRT, this code of conduct, which is effectively is an optional thing. In 2020, early 2020, just before the world changed, the National Audit Office criticised HMRC for a lack of effective policing of a number of tax reliefs, but R&D was near the top of the list. And you could sense at that point that HMRC were beginning to realise, even though they had been told before by the Chartered Institute of Taxation and other people, that there were concerns in the marketplace around some of the standards involved in R&D claims, that there was a problem with R&D and the way in which people were submitting claims and the standards around them. And you could sense that something was coming. HMRC released a number of press releases about additional staff that they were looking to train up. COVID got in the way of that. In all likelihood, most of the people they probably had earmarked for some of this were redeployed to CGRS and other similar programs. And then later on in 2021, HMRC announced that an organised crime gang had attempted to exploit the R&D tax credit system by forming companies, shell companies at Companies House that didn't really do anything, but then followed that up with the submission of a completely fraudulent R&D claim, probably a fairly low value, probably something around 20, 30, 40 grand of R&D benefit. And the attempt there was really to sort of slide in under the radar and extract money fraudulently from the Treasury as a result. So you can begin to sympathise, I think, with HMRC that, in some senses, sympathise at least with HMRC that there's a problem here that needed to be resolved. In my mind, a problem that, and many others, a problem that they could have sort of cut off at the pass about 7 or 8 years earlier, but chose not to. So we kind of then wind on with all those things having happened. HMRC formed what they now call the R&D compliance check team in around, well, we think early to mid 2022. It's part of HMRC's campaigns and projects group. So this is the team of people that HMRC turn to when they think there's a particular systemic problem, and they throw the problem at the campaigns and projects group. And it's their job to go off and essentially put together a strategy and a program to deal with the issue and identify people who are failing in their tax compliance obligations and collect the additional tax required. However, we'll come on to this in a bit more. The general view is that a lot of people in this team are not particularly experienced, and we'll come on to that in a minute. And the general vibe that we've had and the general feeling we've had working on a lot of these inquiries really since the middle of last year is that this work has been given to some pretty low level people within HMRC who've not got a great deal of experience. And at that point, I'm gonna bring Dave in, because Dave's, I mean, how long were you at HMRC, Dave? And what did you do there? I know you want to stay on lots of people's Christmas cards.
I was there from sort of February 91 all the way through to late 2018. Dealt with all kinds of inquiry work in my time, right up through to litigating tax avoidance schemes. So yeah, pretty sort of experienced, I'd say. I think the point is what we've got here with this R&D team run through ISBC, small business compliance, is something quite separate to what has previously been run through WMBC, medium business size compliance, in that they're very much entry-level officers in the compliance sort of sphere that I was used to in my old job. They'd essentially be compliance support, lugging records around, making notes, giving some computational work. You certainly wouldn't have them in charge or anywhere near technical aspect inquiries such as this. So they appear to be doing inquiry work by rote from a sort of crib sheet.
Yep.
And HMRC assure us, where we've pushed back, that these individuals are working with senior leaders and in-house experts to ensure their decisions are correct. But bizarrely, they seem to be able to turn stuff around within a week, which, you know, if you've had any experience of having to engage with senior leaders or technical experts, you don't get a 1 week turnaround. It just doesn't happen. So someone is not being altogether upfront on this, it would appear.
Yeah, I mean, as you say, we've seen inquiries opened and caseworkers working inquiries which appear to be scripted, and we get that feeling because there's a lot of copy and pasting going on in these letters, and you get what I would call a cut and shut letter, which effectively is the fusing of at least two, if not more, letters together, and sometimes you might actually see the name or the description of a completely different business from the one that we're currently dealing with included in the letter, which shows you that which shows you that the caseworkers involved are just really slapping these letters together using a sort of copy and paste approach or a scripted approach, and just not doing it very, very well. I mean, we'll pick up on some of these things, and I got some questions here. But I mean, the big thing with all of this, I think we've got there on the slides. They're mostly attacking claims below 100,000 of qualifying expenditure a year. Typically, I mean, some of those numbers move around a bit, but certainly the bulk of the inquiries that we've seen have been below 200,000, and we think that's because HMRC sort of feel that this is easy pickings. People won't have done their homework when they made a claim of below somewhere around this sort of numerical value. A lot of it's software related, but by no means all. And we've mentioned that the letters are pretty low quality, but the really big issue here is HMRC's manuals talk a lot about, and you know this because you sat at the other side of the fence for such a long time, but they talk about meetings and dialogue with directors and dialogue with technical experts. And in the old days, I'm going to talk about the old days, but 10 years ago, if we had an R&D inquiry, there would be a meeting in all likelihood. Are HMRC prepared to meet us and talk to us in this current sort of round of inquiries, Dave? What have you seen there?
Well, in short, they are not prepared to hold meetings, talk to us, or engage. In fact, they're quite open in that they say that their officers aren't trained to speak to individuals. And it is as stark as that. They're not trained to actually speak with people, it would appear, let alone hold a meeting. So we feel that there's this inherent unfairness in their approach, in that ordinarily HMRC would engage with anyone under inquiry. In fact, your whole training, if they had been trained to undertake inquiries, tells you to speak to individuals. Don't take the records as being 100% accurate. You've got to look into these things. You've got to question things. But more importantly, on something like R&D, where you're talking about competent professionals, you need that testimony. You need to speak to those people to gauge their level of expertise. This is simply not being done.
Yeah. And I mean, it's bizarre because we've had these letters. You and I have talked about many of these letters, but what we have from HMRC is an assertion in writing that these people are sufficiently experienced, well-trained individuals that they can run these inquiries, but simultaneously a statement that they are not sufficiently well-trained to speak to another human being. And that feels odd, doesn't it? And slightly disingenuous and difficult to understand or digest, really.
Yeah, certainly. And I could even sort of recount one that I've got in front of me where HMRC have plainly responded to us to say that there's no need for a meeting because HMRC is a fact and evidence organisation. We are generally able to conduct our inquiries without recourse to face-to-face meetings or conference calls. This is because we can't use any unsupported opinion or information when gathering evidence. Now, as someone with 20 odd years of inquiry experience, it blows your mind when you read that. It's so saddening, really, because HMRC simply aren't doing their job if that's where they're going with this. And there's also an irony because our R&D, the situation we've ended up in here with the R&D tax credits, is that it was kind of an attack by volume tax agents. Volume tax agents generally sort of jump on a relief, claim it whether it's due or not, and it's sort of poor work done cheaply, and they move on. Here we've got a volume compliance team, and they appear to be jumping on a legitimate relief. And for a lot of our clients, or a lot of the experience we've had, is that they're disallowing perfectly good claims, perfectly good claims. But the problem is that with the claim being at a lower level, obviously clients have to make a commercial decision at that point. Do they fight on or do they give up? So we've got this irony that we've got a volume compliance team which is doing exactly the same thing as volume tax agents, but in reverse.
Yeah.
You couldn't make it up.
I think the other conversation that we've had, I mean, there's lots of points we need to make as we sort of rattle through all this, but the other point that we discussed and debated and we've tried to engage with HMRC on, but with no real success, is the HMRC Charter. And there's some key concepts in the HMRC Charter which many people won't, it's a document which most people won't have read, and lucky for them, but it's actually quite a short, sharp document, but it's a commitment from HMRC to treat people fairly, to make sure that a taxpayer gets a tax inspector who understands the piece of tax law that HMRC want to engage with the taxpayer around.
They need the appropriate level of expertise, yes, to do this.
It's a protection mechanism for the taxpayer. It's a commitment from the tax authority to the taxpayer. HMRC do just appear to be setting that aside in this circumstance, don't they? I mean, because we have thrown that at them, but we cannot get them to engage on whether they, why they feel that their behaviour remains consistent with the Charter.
Yeah, we have prima facie evidence of individuals that have engaged in letter format with us that plainly do not understand what it is they're doing. One response was along the, can you explain why you're claiming 230%?
I remember that one. So it was, you've claimed your qualifying expenditure is 100,000. Why does it say £230,000 on the tax return? And you just go, and I think the comment was, please, can you reconcile the difference? Well, the difference is that 230 grand is 230% of 100, and that is the enhanced relief that goes onto the return. That demonstrates a fundamental lack of understanding from the HMRC R&D compliance check team about how the calculation works, let alone kind of the subjective elements of it. That's a black and white element of it. I think at this point, I just ought to say, because I want to make sure we're clear about this. We're all very, very comfortable that HMRC has got the right to make inquiries into taxpayers' tax returns. And I think it's probably reasonable for us to say that we've all seen sharp practice when it comes to R&D claims. I think R&D is complicated, and there's plenty of technical areas where interpretation comes into play. So it isn't black and white. There's lots of elements which are challenging. But we are aware of sharp practice, and we've seen lots of that. So we're completely sympathetic with HMRC's obligation and need to undertake inquiry activity to reduce fraud and error. They quote a figure of 470 million, I think, as being tax loss to fraudulent and error-strewn R&D claims, but that's a very hard number to pin down. And I'm not sure that we're all convinced that that's an accurate number, but I think we all agree there is a sizable number. Ultimately, as well, I think we ought to make the point, for the system to work properly, for there to be trust on both sides, there has to be regular inquiry activity, and people, that should be an accepted part of the system. It's the same with all other areas of tax. If you don't have regular inquiries from HMRC, the boundaries shift. Taxpayer behaviour just gradually shifts over time, and then you get a knee-jerk reaction from HMRC, and that's not what we want here. So I think we're absolutely clear that we need effective HMRC inquiry activity and regular and consistent inquiry activity. I think the comment from us is it needs to be fair, it needs to be objective, it needs to be professional, and it needs to be consistent with the Charter. And that's really, that's really what we're saying. Before I just move the slide on, I mean, I think at different times in the last 9 months, Dave and I and Lisa and other colleagues have asked each other whether we think that HMRC are that the inquiries that they open are almost predetermined. The outcome is predetermined, and that sounds like a sensationalist statement to make. But I'm not going to say that is what my view is, because I'm not sure. I don't know, but certainly the optics of HMRC's behaviour, the speed with which they reply, the fact that they don't read much, if anything, of what you may have sent them before or what may have been submitted with the return, the way in which they dismiss things, the way in which they refuse to meet, all sorts of other bits and pieces. When you put all of that together, the optics do take you mentally to a place where you think it doesn't matter what I write, they're not listening to me. And it almost feels like they've made their mind up before I've even answered their questions. That is a concern, and the reason why I mention that is because there's a lot of activity outside of the inquiries, because sort of from last winter onwards, people recognised this was quite serious. This was a really different way or a different manner of behaviour from HMRC. It was much more aggressive than anything that we'd seen, certainly in corporation tax, ever since I've been in practice, really. So, which is quite a long time now. There's quite a lot going on outside of the inquiries themselves, and I just want to kind of take you through that. The House of Lords have taken an interest in R&D tax credits more broadly, and they've formed a committee which reviewed R&D tax credits at the end of last year, early this, and they issued a report in January 23, and that recognised the problems faced by HMRC and the behaviour of certain agents and R&D claimants. But it also criticised HMRC in terms of their operational response to that and the way in which they're dealing with inquiries. And they did indicate that they thought there was a reasonable chance that HMRC were breaching the charter. So that was a pretty important document, but HMRC have just ignored it. We've actually been in dialogue with the Lord who was the chairman of that, or the chairperson of that committee, and I think he was hoping for more reaction from HMRC, but that hasn't happened. In the intervening period, we've got, there's quite a lot of complaints now being made about HMRC's behaviour. So any taxpayer is at liberty to make a complaint about HMRC's approach to an inquiry, and there's a process to go through, and we've been engaged in that process with some of our clients who, where HMRC's performance and approach has been way below expectations, really. There's a lot of those have been made. We've actually done a freedom of information request around a number of complaints made in the context of R&D inquiries over the last 5 years. Guess what? There aren't really many or any complaints up until the last 12 months. And in the last 12 months, there have been approaching 100 complaints. So that was up to the end of 31st of March 23. So quite a high number. There were some complaints before, but just nowhere near the kind of numbers that we're now seeing. So people are making a lot of complaints. HMRC's time is being absorbed in dealing with those complaints, but it doesn't seem to be changing their mind, because all of those complaints thus far have been rejected by HMRC. The Chartered Institute of Taxation are doing an awful lot of work, and we're members of the CIOT. I'm a member of CIOT as an individual. We feed into them on many matters, and their technical team began looking at this at the beginning of the year. They've been in dialogue with HMRC a number of times in face-to-face and on meetings and also on Teams meetings, but they haven't really got anywhere. They've collected an awful lot of data from us and evidence, anonymised evidence from us and many other firms, and that has been collated. And last night, we haven't incorporated it in the slides, but last night the CIOT actually issued a press release and a letter to the senior R&D policy and operations team at HMRC. and it's a really good read because it's an in-depth analysis of what's been going on the last sort of 9 to 12 months, and the weaknesses with HMRC's approach and some of the problems that it's been causing. So that's a good read. Recommend that to anybody interested in R&D. And so a very good place to go, along with the House of Lords report that I've referenced at the start of this slide. Despite the fact that the Chartered Institute of Taxation are highlighting with a lot of evidence some of the sort of substandard performance issues from HMRC, we think that appetite for this campaign, a campaign of this kind with R&D, is actually supported at a pretty high level within government. We think that because, well, for lots of different reasons that probably haven't got enough time to go into, but the indicators that we've got from all the representations that we've made to different people are that some pretty serious people at the senior levels in government are actually committed to this. But what we don't know is if they understand on a day-to-day basis actually how HMRC are delivering the strategy, and we hope that they don't, and we hope that through the CIOT submitting that document, that some of those examples are now kind of out in the open, and people at the Treasury actually kind of review and rethink their current approach. Whilst we're in the middle of all of that, and we'll come on to some of these issues in a minute again with Dave, the likelihood is that some of the bigger claims which HMRC have rejected, which are more sort of evidently R&D, and I'll mention a couple of those in a minute, it's likely that we're going to move on to tribunal with those. And if not tribunal, something called ADR, which we'll pick up in a minute with Dave. But the reality is, for many claimant companies, that they're not actually making claims at the moment. They're delaying making claims, waiting to see what happens. Many are making the decision that whilst they think they do valid R&D, they actually undertake valid R&D activity. They don't want the pain and the uncertainty that an R&D inquiry would bring. And we'll come on to some of that in a minute. So there's just a lot of uncertainty around at the moment, but there's a lot of effort going in from the accountancy firms to try and improve the situation, and hopefully I've given you a bit of a flavour of that. So, I mean, we haven't really touched on anything that's gone into an R&D report, or how to do an R&D report, or anything like that at the moment, because we will come on to some of those things. But where we've got with lots of our inquiries, Dave, as you know, is we've been sparring with HMRC for a while. We've supplied them with all sorts of information. We've asked them for a meeting. They've ignored us on many levels. And then all of a sudden, they tell us that they're going to send us a closure notice. Can you just very briefly explain what happens at the end of an inquiry, and where do we, what are the options that we have if HMRC they don't agree with us?
Yeah, sure. When HMRC have reached their conclusion, and generally on these, it's the 100% no R&D, they look to disallow the claim. The closure notice is that formal notice from HMRC that they are disallowing the claim and adjusting the corporation tax return accordingly. We then have 30 days within which to lodge an appeal. We can also ask for an independent review, statutory review, which is reviewed by an independent officer, and the independent officer could review the case again with a little extra sort of detail from ourselves and come to an alternate conclusion. We haven't seen that yet, but it could happen. And then moving on from the statutory review, the inquiry closure should proceed towards either listing the appeal to the first tier tribunal to have a hearing there, or potentially we could apply for ADR, alternative dispute resolution, and that's a format offered to settle by agreement outside the first tier tribunal sort of arena. Going to first tier tribunal is generally quite an expensive endeavour. It's cheaper to go to ADR, but it's still a relatively costly sort of experience, because it's essentially about a day and a half is our experience as regards time to prepare and then to attend the ADR itself, which can run for roughly a best part of a day once it's all in. So it's ADR is fairly expensive, but in other ways it's a positive way to get HMRC to actually engage and talk.
But at least you get to speak to a human being, presumably.
You do, yeah. So it's a good place to actually sort of make our case. So if we feel that there is a flawed conclusion from HMRC, which is generally what we're seeing, then ADR can be the way to go. The problems we've seen with clients essentially sort of giving up straight away is that HMRC then jump into right, it's got to be careless, got to be penalties, and so we end up into that arena almost immediately. Yeah,
maybe we'll come back to that.
Yeah,
in a minute.
Sure.
So let me just pick up on a couple of things there. So we've seen quite a few cases where HMRC have said that the inquiry is closed, but they haven't actually issued a closure notice, and that's something that's been seen by many other firms.
Yes,
Chartered Institute of Taxation have picked up on. So that's obviously a bit of a problem. It demonstrates that the caseworkers don't understand the process that are operating, for a start. But we've had cases where we've been, I think, we personally, not Francis Clark, but we know other firms have had cases where HMRC have said they're going to close the inquiry, no formal notice is issued, and the next thing the taxpayer knows is they're being chased by debt management within HMRC, which is basically credit control of HMRC, isn't it?
Yeah.
So pretty scary, really.
Yeah. I mean, it's just further evidences that these individuals that are, quote, running the inquiry don't appear to know what they're doing. Because these notices aren't going out. We've had experience of a closure notice where HMRC have said it's been issued. In fact, they even comment on it in one of their later letters. And then we've asked for the thing because no one's received it, and it's come through. It's just bizarre. It's just very strange. But they do appear to be operating with minimal, if any, supervision at all. That's the experience from this end. So HMRC will say otherwise.
Just on ADR, I mean, ADR it's been around for a reasonable period, but it's not it's not been tremendously trendy, if I can put it like that. But we understand anecdotally that there's quite a lot of people with R&D disputes at the moment looking at ADR. I know you've actually engaged in ADR processes, presumably both sides of the fence. Can you just give somebody an insight into what happens in an ADR meeting? It's a mediation meeting, so there's no guarantees that you're going to walk out with a result, presumably. Yeah,
it's a mediation meeting, but the mediator, who should always be independent, is actually HMRC. They have a gov.uk email address. But that said, they are ADR mediators that I've ever experienced inside the department and from the outside of the department. They're massively at pains to emphasise their independence. But ADR is essentially 4, 5, 6 hour, even 8 hour meeting with officers from HMRC, where they are at that point somebody who kind of understands or knows what they're talking about. So it's a chance to talk frankly, introduce evidence, introduce commentary, testimony, whatever, from individuals directly, and talk about the issue at hand and try to sort of strike a balance and find a way out. One of the massive issues with this is it appears to be 100% rejection of every claim. So even where there is, without any shadow of a doubt, R&D, it's disallowed 100%. So at least you'd hope that once we enter the ADR arena, HMRC can pull back from that completely flawed approach.
Can we move on to disclosure and penalty? So I think, you and I sat on many phone calls the last 6 months talking to clients about these two issues, and they kind of go hand in hand. One of the previous options on the slide, once you get a closure notice, is to concede. And for many clients with fairly small claims, that may be the kind of the immediate thing that goes through their mind, provided it is the only year that HMRC can adjust. And we know that companies often have done 4 or 5 years of R&D claims, and this is the 4th or the 5th one. It's not always the first. How far can HMRC go back? What are the criteria for looking backwards?
Yeah, sure. Well, this is where we feel perhaps, to some extent, there's this impression that there's a numbers game going on at HMRC, and just by rattling through as many inquiries as quickly as possible, rejecting as many claims as possible, and it makes the stats look great. So there could be that going on, but also there could be a rush to demonstrating, as it were, carelessness, because that opens up a 6-year time limit. So HMRC can go back to any accounting period end that's not more than 6 years away. So there could be that going on, but we're not seeing them going back into earlier years at all. They just seem to be looking at the current year, disallowing the claim, hitting a penalty, and then moving on, or trying to, if we can have a closure notice.
So, I think this is a really interesting thing. It's a big topic, isn't it? So, and it feeds into conversation we're going to have with Lisa in a minute, really, which is you can make it harder for HMRC to go back 6 years, as Dave said, which is the maximum that you can go back unless you've been really naughty. And the way in which you do that is you demonstrate that you weren't careless, and B, you actually provide full disclosure. Now those two things are a grey concept. So R&D as a thing, you have a very grey definition of what R&D actually is, and consistent with that, we've got the concept of carelessness and the concept of full disclosure, both of which are again reasonably grey things. And as most people on this, on this session will appreciate, our view of careless and full disclosure is probably slightly different from HMRC's because we've got competing objectives. But the more care you can take and the more disclosure you can provide when you put together an R&D claim, presumably the harder it is for HMRC to go back more than the 2 years which we have under the basic corporation tax inquiry window.
Yeah, full disclosure within the claim that's made. Basically, any pushback we've got as regards the sort of allegation of carelessness or a lack of care in preparing the claim is certainly beneficial to the client at that point. And in a lot of instances, we're seeing the allegation of carelessness is just completely flawed. It's based upon clients not contacting HMRC before they submitted the claim. And this is irrespective of the fact that they're not required to do it, and also there was no way of contacting HMRC to discuss the R&D claim in the first place. So it's an absolute nonsense.
Yeah, so it's interesting. The Chartered Institute of Taxation's letter to HMRC, which was circulated yesterday, and I suspect I'll speak to Ruth afterwards. We can probably send a link out to that maybe after the session. But there's a big section in there about carelessness, because the Chartered Institute of Taxation are appalled by HMRC's approach on this. There's a lot of case law. In fact, there are sections of HMRC's inquiry manuals which talk about carelessness and professional advice. So if you can demonstrate that you have taken reasonable care and you've engaged a professional who's skilled in the field that is relevant here, which is R&D and corporation tax, then it's pretty difficult for HMRC to say you were careless. Now, they may not agree with the claim, and they may have a different interpretation of whether something's R&D or not, but that is just a matter of interpretation in our mind. It's not carelessness. So I think those things are really important, and we'll come back to with Lisa in a second about the way in which the rules are changing going forwards, like what you've got to do to put together a valid claim. And I mean, I think this is the big lesson really from the past, which is not all claimant companies put together well supported R&D claims. Many of them just put a number on a tax return with no description or supporting narrative to explain to a reviewing inspector why that R&D claim was made, what the company does, who the competent professionals are, what the projects were, why the company believed it met the criteria necessary to be qualifying R&D. And quite apart from anything else, where that potentially leaves you is you have not made full disclosure. You are open for 6 years, and I think you're open for 6 years, but you're also open potentially for penalties, because whilst you might have engaged a professional firm, it's harder at that point to say that people haven't been careless, because you haven't actually submitted any real support for your claim. So, I think the general message is, if you were a company that filed very little with your R&D claim historically, that is something that we would be strongly recommending you reconsider going forwards. And as we'll come on to in a minute, that the system is making you do that. So let's just talk about penalties, Dave, very quickly. And very quickly. We kind of covered this in a way, but what are we seeing from HMRC in terms of penalties? What are they saying to us, and how are we kind of dealing with that?
Well, it's essentially it's difficult for us to agree with HMRC's conclusions in a lot of cases, but it's not to say we haven't overturned them. And similarly with penalties, their conclusions as to why penalties should be due, we've similarly had success in overturning that position. But more often than not, they base their conclusion on carelessness as being that clients hadn't consulted the various guidance manuals of HMRC before making their claim. Doesn't matter that they had professional advisors. That seems to be one conclusion from HMRC. Or the second one, that the client hadn't spoken to HMRC before making the claim, which is kind of ironic, because now HMRC inquiring into the claim, they don't want to speak to anybody. But anyway, that aside, we then have an issue with suspension. Normally with careless inaccuracy penalties, HMRC ordinarily are duty bound to offer suspension, where the penalty can be suspended for a period once we've agreed suspension conditions. We were having some success with suspending penalties on previous inquiries with the WMBC team, but with the ISBC team, this new team, they're simply not interested in suspension. We get the
they won't tell us why.
Sorry?
They won't tell us why, though, will they?
No, but they commonly say that they can't see how suspension conditions can be arrived at. We point out that we've already been there, done it, got the T-shirt, and they don't want to know. They won't give us a response as to why they feel they cannot reach suspension conditions. So it's a bit of a nonsense. But essentially, if we don't agree with HMRC's position on the penalty, we've got 30 days within which to appeal the penalty assessment. And we've had some success on those grounds. HMRC generally look to levy a penalty between 15 and 30%. They go for the 15%, which is the bottom of the range. And I think that's a rather cynical exercise, because then that cuts out any debate over the abatements that should be applied. It's just basically whether there's a carelessness or not. So then it's just a matter of us sort of presenting why we believe clients have acted reasonably, and there was no lack of care.
And we've done that, but we've also got a stack where HMRC currently is saying you've been careless, and we've got to deal with that.
Yeah.
And just for the avoidance of doubt, presumably if HMRC go back 6 years, it's a 15% penalty on the tax for the 6 years. Yeah. I just wanted to. I need the answer to that one day. I just want to make sure everybody else.
No, it's just
penalty number can be big.
Yeah, to go back 6 years, they have to demonstrate carelessness. So whether they demonstrate carelessness or not, sort of sufficiently, if they're going back 6 years, then they're going to put on a careless penalty onto that tax. Yeah.
Okay. Plus interest.
Yeah.
Okay. So, well, I mean, this slide, when we're Lisa's sat there wondering when her time will come, and we ought to get around to that. But there's all sorts of things going on at the moment, and we've talked about those already. So I'm going to skip on through that slide, and really then talk about forthcoming changes. And before I sort of bring Lisa in, I mean, there's just a lot that's happening here at the same time in R&D. We're trying to deal with this tail of inquiries. But also we've got a live consultation. Well, I say live, the consultation is closed, but we're awaiting the outcome of that. And there's a lot of things in there which are important. And then we've got some changes. So there've been some rate changes, Lisa, I think, from 1st of April.
Yeah.
Can you remember what those are? Or
rate changes from 1st of April this year for R&D. So the SME R&D relief has been reduced essentially by a significant amount. So it's gone down from what was previously 130% up to 1st of April. And from 1st of April, it's now down to 86%. So it's a significantly lower percentage. And on top of that as well, we've got the cash credit that's been reduced. So that's gone down from 14.5% that you can claim down to 10%. Albeit it could potentially be increased back up to the 14.5% if you can qualify as an R&D intensive company, which effectively the R&D intensive company is where you can get your qualifying expenditure for R&D is at least 40% of the company's total expenditure. So there is potential for some of the bigger qualifying expenditure claims to get that cash credit back up, but it's going to hit the smaller claims potentially where the cash credit is being knocked down.
Yeah. Okay. I mean, I think that's just symptomatic of a number of things, but I think, and we'll talk about this when we get to the conduct. But HMRC, I think, are keen to actually diminish the value of R&D tax credits generally. For SMEs at least, to make it less attractive for fraud and abuse. Can we? I mean, the big hot topic really is the additional information requirements on 1st of August, which are effectively less than a month away now. Were announced in I want to say it was the end of June, not the end of June, the end of April, but I think a lot of people hadn't really digested what it means. Can you just take us through what those additional information requirements are from 1st of August?
Yeah, of course. So the additional information requirements from 1st of August are quite significant. It involves a lot of additional work. So essentially what you have to do is submit an additional information form, which has to be an online form on the HMRC system, which isn't always particularly friendly anyway. And you have to submit that additional information before your corporation tax return. And if you don't submit it before your corporation tax return, then your R&D claim will be rejected. But that additional information form is going to have to contain a lot of information that's submitted before your return. And what that's going to need to include are things like your UTR, your PAYE reference, VAT registration, the SIC code for the company as well. But also it's going to need to include a named officer of the company who's in effect dealing with the R&D itself, plus also the agent involved in that R&D claim. You're also going to need to essentially what you would normally put in an R&D report, so all of your project details, all the advances, the uncertainties, baseline technologies of projects need to go into this additional information form as well, together with qualifying expenditure. And that qualifying expenditure has to be separated out on a project by project basis, but it also has to be separated out again by your qualifying direct and indirect costs for R&D as well in relation to those projects. So there is a significant amount of information that needs to be submitted before your R&D claim goes in, essentially with your tax return, because if you don't do the additional information form, then your R&D claim is rejected. So they have said that you can still submit further information, which essentially they're saying, yes, you need to submit further information when you do the report, such as things like claim methodology, sampling, and also details of competent professionals. So they're things that, we should be detailing anyway, but it's going to need more detail on it, especially around the advances, uncertainties, baseline technologies, to get it across to HMRC, and this all needs to be submitted before the return.
And this applies to any claim after the 1st of August, or is it some other way of dealing with it?
It applies to all claims being submitted post 1st of August.
Okay, so it's just a cliff edge.
Yeah.
Okay, that's clear. Yeah. Okay. I mean, you're right. This is a lot of the stuff that we produce in the R&D claims where we're kind of fully engaged to prepare in-depth reports for clients. For smaller claims, it's always been the case that HMRC have been, in their own manuals say this as well, that they accept a lesser amount of information, but and different types of information, recognizing that a small company is different from a large company. There's no difference here between what's in real terms required between a quite small company and a medium to large entity. I mean, there's some specific rules for large business customers I can see, but they're your kind of super large ones, your listed entities, where you just got a large mid-sized corporate one turning over kind of under 200 million, which is actually quite a big company. The rules are just the same as they are if you're turning over 50 grand. So
exactly,
it is going to be a lot of extra work, I think, particularly in year one, the first cycle. And I'm sure, because we have this experience in other sort of fields of corporation tax and corporate tax returns and tax returns generally, submissions to HMRC through the portal don't always go correctly.
No.
So I mean, I think I'm kind of lining you up for leading you here, but I mean, your view, R&D claims are going to take longer, aren't they, to do? They're going to take more preparation.
Yeah, R&D claims are going to take longer to do, more preparation. You're going to have to be preempting what you think HMRC might ask. What areas, you're going to have to be looking at your projects, your details. Where do you think there are weaknesses in the claim as well? There's a lot of detail that's going to need to prep, and it's going to take a lot longer to do this. Like you said, especially in the first year. In the first instance, when you're looking at it, it needs to be a lot more thought going into it, which is inevitably going to take longer time to prepare. Yeah.
Okay. I should just point out we're approaching 1 o'clock and we're just a few slides off finishing, so we're going to carry on. And people who feel they need to go and get a sandwich or a cold towel or some cucumbers to go over their eyes, obviously you're free to do that. So the other thing is there's a new. Apart from you, Dave. The other thing is there's a notification requirement coming in. but not immediately. Can you just talk us through that quickly?
No, yeah. So on top of that additional information requirement, there's the new notification requirement coming in. Now, this applies to accounting periods that commence from 1st of April this year. So essentially, in simple terms, if we've got a standard 12-month accounting period, we're not going to see this until year end starting 31st of March 24. But what we're seeing is you're going to have to notify where you want to make an R&D claim to HMRC. And this notification must be done within 6 months of the end of the period of account that the claim relates to. So in my example, if we've got a 31st of March 24 year end, then you have to, by the end of 30th of September 24, notify to HMRC that you are going to make an R&D claim. So that's additional requirement on top of the additional information that's required before submitting your return. But you have to do this 6 months.
And if I forget, what's the outcome?
If you forget, you can't make an R&D claim. Your R&D claim is rejected by HMRC.
And is it all claims that are subject to the new 6-month rule, or is it just some?
So it's just some, but predominantly it will catch quite a lot of people. So a pre-notification must be made by all business who are first-time relief claimers. So if you've never claimed R&D relief before, you must make that notification. Or if you claimed in the previous year, but the claim wasn't submitted until after the last date of the claim notification period, so you submitted your claim after the 6 months notification period of the prior year, or your last claim was made more than 3 years before the last date of the claim notification period. So if you made a claim more than 3 years ago, then you're going to have to do a new notification.
Okay, thanks for that. Sorry, incredible COVID type style Teams moment where you're sat next to a window and suddenly there's a window cleaner slamming a thing against the windows. You're trying to present a webinar. Classically lost my train of thought. Okay, so I think there's more complexity there, and there is a real danger that people just don't know that 6-month requirement exists, think that it's the normal 2-year requirement, and miss their opportunity. And A, advisors get into trouble probably unfairly, and B, you've got some disappointed clients and companies. So
and not only that, Stuart, it also just places an additional burden on the company as well, and more time consuming, because in that pre-notification you do need to state the planned activities that you're going to claim on the R&D as well, which is again more work to be done.
And effectively earlier. So many clients leave their R&D claims till the last minute and then package it up rapidly and then kind of on the assumption that we can get that in for them just before the deadline. That's just not happening going forwards, is it? I mean, there's just no way the system works for anybody if that's the approach that's taken. So R&D's almost got to be a real-time, quasi-real-time information gathering activity within the claiming company. Yeah. Okay. Let's have a look at the R&D consultation quickly then. I mean, I'm just trying to pick out some of these things here, but it looks to me, and you can by all means jump in. It looks to me as if we're going to have one single R&D regime. They're going to get rid of the SME regime, apart from the R&D intensive stuff, but we're going to have one single large company regime, possibly from April 24, but we don't know that at the moment. And that would simplify things a great deal. The other thing that I think is really frustrating, amusing, funny, ironic is the minimum expenditure threshold. So I think I might be right in saying that there was one originally, 10K. And I think it was 20. I read something yesterday that was 25 at some point, and then it got dropped to 10, and then it got dropped from 10 to 0. So I think when it started off, it was 25. Now I'm guessing completely here, but if you put a bit of inflation around the 25 from around the year 2000 up to now, I mean, it feels to me like that might be around 50. I don't think there's any mention in the condoc around the number, but given that HMRC are worried about fraudulent low-level R&D claims that they can't police and it's not worth them reviewing properly, and indeed their current approach shows they can't do that at that level. They can't engage the right kind of caseworkers, the right kind of skills for a 50 grand, 60 grand R&D claim. I mean, I expect, I don't know what you guys think, to see a minimum expenditure threshold of around 50k.
I think about 50k is the reasonable amount that they're going to go with, especially given 50k as well, with the increased amount that you're going to have to put in the report, the increased time commercially for clients and companies. It may cost more to get the R&D claim together for the information that's now required than it is worthwhile the R&D relief.
Yeah, I mean, and we haven't touched on so many things about other things that we're going with the world of R&D. So there's issues around subcontractors and subsidies, and there's blue sky thinking. Customer funded R&D is what it's often labelled as, and HMRC are active there, and there are a number of court cases lined up to go to tribunal on that. And we haven't mentioned that at all in this session, but there is complexity within R&D. You know, so many people think it's just a spreadsheet and a few words, and kind of Bob's your uncle, job done, get it in. I think going forward, that's just not, very few people will feel like that. In terms of what we do, we just don't feel like that, and we'll feel that there is always going to be work to be done, risks to be managed, technical issues to be considered. HMRC are more vigilant, they're more prepared to be aggressive, and so the cost of an R&D claim is going to have to change to suit that. And I think the other big thing is, which we're seeing more and more of, is confusion around who in the supply chain can make an R&D claim, and that gets back to my point about customer funded R&D, really. So HMRC are proposing a number of solutions, but I think the one that they'll go with is that you won't be able to claim subcontracted R&D costs going forward, where you sub out a particular piece of activity to a third party to do. You will only be able to claim R&D tax credits if you employ people, basically. Employ them as employees. You won't be able to claim for contracted out activities. And whilst that may diminish claim values for some people, I think it brings a certain amount of simplicity and symmetry and common sense to what is actually a pretty difficult part of the system at times. So yeah, okay. We can have a bit of a debate about it for 5 minutes. There's still a good 150 people on the webinar, and we'll try and wrap up by 1:15. I mean, I think in terms of takeaways, and Dave, Lisa, just dive in here with some of your own thoughts. But I think key thing for me, and what we've been telling people for a number of months, is don't rush your R&D claim processes. Think really carefully about what your claim is. Think about how critically review how you've documented it in the past, and try and think about what its weaknesses are. Look at disclosing more, look at building more into it, try and provide more detail, look at the guidelines. I think that's an important thing, isn't it? I mean, Dave,
making sure it ties in with the guidelines. I think any project that you're doing is really key, because HMRC really do pick up on the points within the guidelines. Yeah,
I think that's one thing we haven't touched on in terms of trends for the inquiries, but HMRC very much want an R&D claim document to say, this is what the R&D, this is the baseline, this is what we did, these are the uncertainties, this is how we overcame it. And then they want you to link it to specific paragraphs within the guidelines, which is the definition of R&D, which is about 4 or 5 pages, maybe a bit longer. But it certainly, it's a number of paragraphs which deal with different points about what R&D may or may not be. But they want you to identify which paragraph or paragraphs they think resonate most with your project, so they can understand what your argument is for it being qualifying R&D. You are effectively spoon feeding HMRC, but if that's where you need to go to get your claim accepted, then obviously you need to consider it. I think the other thing is that there are often weaknesses in claims, and we highlight those with many of our clients. But I think as a claimant company, it's important to understand that whilst you may feel that you're doing genuine R&D R&D activities which qualifies, there still may be weaknesses, technical weaknesses in certain aspects of that claim, whether it's customer funded. The amount that you're claiming sometimes can be quite different from where we or HMRC might think you should be going. You might be sort of spinning a super positive approach. So I think it's important that you get some. I mean, one of my audit partner friends uses the phrase critical friend. So I think it's important you get a critical friend who can actually, kind of tell you as it is, so that you can bring some objectivity to your review before you submit something. And that's the role that we think we try and play. And then the other one is delay or submit. We've got there. I mean, we have many clients who are just delaying submitting for the moment because they've still got plenty of time before their hard deadline, their 2-year deadline appears, and they're just trying to decide, whether they feel confident enough to make the claim, and they just want to sit back and wait and see what happens. We've got other clients who fervently believe that what they're doing is absolutely R&D, and we agree with them, but we're working with them just to make their claims more robust. So I think for everybody, it's keeping abreast of the story, and it's understanding that there's a lot of activity in the background with the Chartered Institute of Taxation, the House of Lords report. I know the British Chambers of Commerce are contemplating doing something at the moment. So we're hoping that some of this is going to change and that HMRC are going to be more reasonable moving forwards. But I don't think they're ever going to be, I don't think we're going to go back to how it was 5 years ago ever. The world has permanently changed. R&D is not what it was. R&D is not the nice cushy number it used to be. It's now an area that HMRC are going to be looking at for some time. We've got to respond accordingly. I don't know what the two of you want to say in terms of concluding remarks, but that would be mine. The world has changed and people need to kind of get with it. What do you think?
Yeah, I mean, there's a question there from Barry as regards to the level of claims. I think it's just important to emphasise that it's anything and everything really is what our experience has been, and we're talking with other sort of industry colleagues, and we have evidence of HMRC inquiring into, I think it's £129 was the claim. So as well as inquiring into something of a sort of hugely big claim of £1 million or whatever, they're going all the way down to tuppence halfpenny, it seems. So everything seems to be on the table with regards to this current team. But we've made complaints on behalf of clients, and we've got the ear of people within government, and hopefully at ministerial level they're considering this too, in light of what we've raised. So we've just got to see how the future pans out on that as regards the actions of this team. But at some point, HMRC have to come to the sensible table.
Yeah, I think they do, and I think you're right, Stuart. I don't think we're going to see R&D claims like we've been seeing in the past, especially with the potential of the minimum expenditure coming back. It's going to cut out quite a lot of claims, and so HMRC want to focus on the bigger, more detailed claims. We've got so much more work to put into making an R&D claim now. It's going to be the bigger claims that are going to need to be submitted.
Okay. I don't know whether it's just me, but I can't see any questions at all coming through. It might be that we've dealt with everybody's questions so well that no one's asked anything.
There's one from Nigel Is there a deadline for the additional information to be submitted if the claim's made after 1st of August 23?
So the additional information that needs to be submitted, so that has to be submitted before your corporation tax return is submitted.
Is Nigel meaning you referred to some additional information, Lisa, after the initial information has been submitted? So the post 1st of August list
one.
No, so you said that there was on that the post 1st of August, you didn't have to, for example, submit the competent professionals details at that point, but you would put that in the report. One assumes that that's the normal 2 years after the end of the accounting period. Yeah, okay. So I think that deadline is still there. That kind of normal self-assessment window is still there 2 years after the end of the relevant accounting period. But in order to get that far, you've got to have done some earlier things.
Earlier work.
I think that's kind of
on the additional information form. Yeah.
Well, was there another question that you can see?
No, I think that's it as far as I can see.
Okay. All right. Well, that's an hour and 17 minutes of everybody's time, and we, I mean, I look back at that and think there's so many things that we probably didn't explain tremendously well, or get into a lot of detail around. And I mentioned customer funded R&D, which is probably another webinar in its own right. But I think what that goes to show is that R&D now is a complicated area. How to deal with an inquiry is a complicated area. There are many things you need to think about. There are so many places it can go horribly wrong, and as a result, it is really important that you engage with your R&D advisor early, that you get to understand the new processes yourself, take ownership, and that you're more engaged around it, and you realise there is risk with R&D, and you've got to understand that risk before you can make an objective decision about whether you want to claim, or if you are going to claim, how you're going to prepare that, and how you're going to make sure that the risk is managed in the most appropriate way. So I think there's big change here. We're going to be sending out plenty of e-shots to the FC client base over the coming months, just to make sure that everybody's really clear on what these changes are and what they mean. And we'll do our best to navigate everybody through some fairly choppy waters. But the big message is there's more work to do. Think about it earlier. Engage with the story. Engage with the change really, and then you'll be on top of things. So on that note, I think I'm going to say thanks for staying with us for an hour and a quarter. From me, goodbye. I'm sure from Dave and Lisa, goodbye as well. I feel like a game show host.
Cheers.
And have a great day. Cheers now.